Hi, everyone. This is Jason Barrick of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is founder and editor-in-chief of the Let's Talk Bitcoin show. He's also the founder of the LTB Network and Tokenly. Adam B. Levine, thank you for joining me again.
Thank you very much.
Now, Adam, I want to ask you a big picture question about Bitcoin. Would you still classify Bitcoin as an experiment?
Yeah, I think Bitcoin is still an experiment. It's an experiment that's getting bigger all the time, and it's an experiment that, in the last couple of years, I think anybody who didn't have complete faith in the idea pretty much gave up on it. And now this year we've come roaring back. So, yeah, I think that more and more people, even if they classify it as an experiment, are thinking it's an experiment that seems like it's likely to succeed.
Yeah, I think it's definitely a successful experiment so far. I think there's been, over 1,000 obituaries written by mainstream media people who don't really have a technology background saying Bitcoin was dead. Those same people also hate gold too, by the way. And Bitcoin has, almost a $73 billion market cap now. So it seems there's been a lot of time and money and investment, whether it's Wall Street, whether it's large corporations, whether it's a bunch of computer programmers not getting paid and just donating their own free time to it, Silicon Valley capital coming in, all want to see this, progress and succeed.
Very much so, yeah. I mean, the space really has seen a huge expansion in the last, I'd say 12 months, really. We've been operating in the space for quite a while, and I've been the CEO of Tokenly for 3 years now. And just this year, we noticed such a change in terms of how the companies we were talking to wanted to engage on this and their willingness to actually try new things. Our business development cycle for a long time was really long, and in the last 6 months, it's shortened dramatically to the point where we have just a ton of announcements coming up that involve real-world brands doing kind of blockchain or tokenization firsts. That, again, we couldn't even imagine a year ago. So, yeah, the space has changed hugely, and then all the money that's come into it because of this excitement. When I first got involved in 2013, I was kind of witness to the first bubble up to $130, and at the time, it had I started calling it a beaconing effect, because the increase in price would pull people in who had previously been like, oh, that's going to fail. That might be a neat idea, but it's not going to work. And every time the price does this, and we go up to new highs, then it pulls in people who might have kind of looked at it before but not really been interested. But then they say, oh, well, I was dumb because the price has gone up, and it's shown me that I was wrong to not pay more attention to this at the time, and then those people get involved. And so the last time what happened is the price went up, it pulled in a lot of people, pulled in a lot of money, and then people started creating companies, right, that were doing really innovative things. And then the market collapsed, and we had basically a bear market for 2 years. And in that time, in that 2-year period of time, those companies that had been attracted by that initial spike in price mostly didn't stop working. A lot of them failed because it was a really hard environment to be in, but still, it's kind of like each one of these increases in price brings in the next level of kind of innovative companies and concepts. And then even if the price goes away, those companies stay kind of under the radar until they're finally ready a year or 2 years or 3 years later to start releasing those products. And really, that's what I think we're starting to see, a lot of those releases from 2014 coming into effect. And I'm looking forward to seeing what the next crop of things that pop up from this one are.
Yeah, Coinbase has, I think, it's not going IPO yet. It's close, but they have over $1 billion valuation. But we're starting to see now, Adam, people complaining about the price that's charged to do Bitcoin transactions, and people complaining about how long it takes to clear a transaction. Do you think that Bitcoin doing a fork and trying to go after maybe credit card processing is a bad idea?
So this is a controversial topic within the Bitcoin community. There are some people who think that it would be better if there was just kind of one version of Bitcoin. I actually think that it's worth having the confusion to do both experiments at once. Basically, the situation in Bitcoin, for anyone who hasn't been paying attention, is that for the last 2 years, we've had two factions arguing within kind of Bitcoin about what the direction of this thing should be. If it should basically be digital gold, where the transactions get too expensive, eventually transactions cost hundreds, thousands of dollars in fees, but it's incredibly secure, right? But you can think about it like it's an expensive but more convenient digital gold system that could actually work in a lot of capacities. And then kind of the other camp, and this is the camp that's split off what you're talking about into Bitcoin Cash, say, no, that's not the point of Bitcoin. The point of Bitcoin is that I should be able to send a payment to anybody, and I shouldn't have to pay hundreds of dollars in fees because most of the world can't afford that, and I shouldn't have to trust a company that's using Bitcoin with this hundreds of dollars of fees method as a settlement company, right? So that's really the kind of argument that's been going on. And for 2 years, it was just the most annoying thing because they wouldn't really fight fair. The problem with this type of argument is that they're both right, right? There is a use case for cash that, for Bitcoin that works like cash and that's really cheap to send to each other and that's really easy to use and that is a better version of kind of credit card money. And then on the other side, there's a really good use case where you would want to have this digital gold that has so much security on it that nobody will even ever think of compromising the system, and yet it's so much more convenient than actually shipping gold or shipping promises of gold around to each other. So it's controversial because they're both called Bitcoin. One is called Bitcoin and the other one's called Bitcoin Cash. But in net, frankly, I think that it's really good for the ecosystem, and it allows both camps to try and prove that they're right. And the market ultimately will decide, if the price of Bitcoin Cash goes to zero, well, I guess the cash guys were wrong. But similarly, that doesn't necessarily happen. And with Bitcoin, the way it works is that you actually can try both of these experiments at once. So I think it's a really net positive. I mean, it'd be great if we could see different types of dollars, right, or different types of money that actually try to solve different problems, right? Dollars that were okay for microtransactions, dollars that you could move securely, that without having to go through kind of the existing banking system in the same kind of, well, we're going to take your money and then we're going to hold it, we're going to collect interest on it, we're going to transfer it to somebody else, they're going to collect interest on it. There are all sorts of kind of manufactured delays, and so being able to have a way that doesn't go through those people is kind of a positive for people who would like to have more efficient systems.
Yeah, I'm all for free market competition. So if you want to have different altcoins that are somewhat similar but have different innovations, do you think then basically it's a trade-off from Bitcoin and the fork between security versus innovation? Is that kind of the same trade-off then between Bitcoin versus Ethereum?
So Bitcoin versus Ethereum is different than that. It's similar in that, like, they're tangentially related, but I would argue that what you get with Ethereum is complexity. And complexity is one of those things where if you use it well, then you can do really amazing things with it. And if you use it poorly, then you just make something that's confusing and hard to use and likely to break. So it is like that. Bitcoin Cash is almost identical to Bitcoin. It uses, the same people who have Bitcoin. If you had, one Bitcoin going into this, then now you have one Bitcoin and one Bitcoin Cash. And so that kind of is an interesting, unique thing about it. But really, yeah, it's just that. It's that, there are all sorts of theoretical limitations on what happens if you have blocks that are too big, or if you have too many transactions processing in Bitcoin at any one time, then that can cause issues. But those issues have largely been hypothetical. And the argument is that we actually have been increasing the block size for the last 9 years. The block size might be limited to 1 megabyte, but it took us a long time to actually get enough transactions that we were hitting that limit. It only happened in the last 6 months. So again, it just sort of depends on what you're talking about, because from some perspectives, the change that we made that was not Bitcoin Cash is actually more risky because it changes how transactions exist within the blockchain structure itself, while the Bitcoin Cash argument is basically just, we're not going to change how transactions work, we're just going to literally increase the amount of transactions that you can put into, a given amount of time.
Yeah, I'm not very technologically savvy, so I can't really give an opinion on whether the fork is a good idea or a bad idea. But I can say, I'm all for free market and innovation rather than having regulators or government step in and decide, we're only going to allow one or we're going to ban these types. But what worries me, though, Adam, and I think we're starting to see some examples of this a lot lately, is, in the initial coin offering market, where there's a lot of retail investors that don't have a technology background like you or the other people at your companies that are only, participating in they're buying these altcoins, they're doing initial coin off, they're speculating in initial coin offerings. They're only doing this because of the price action. So, you said you agreed that there's also a potential bubble here in initial coin offerings. The co-founder of Aetherium in mid-July of this year, Charles Hoskinson, warned of an initial coin offering bubble. in your opinion, then, what are some warning signs then for retail listeners who don't have a technology background? Warning signs of potential fraud in ICOs. What should they look for and stay away from?
Sure. So again, to be clear, I'm not a financial advisor and I'm also not a lawyer. I can share from personal experience that I actually participated in a token sale recently that wound up being a complete scam. Like, not a complex scam, just a good-looking scam that caught me because I was being lazy, and that just as soon as they had, as soon as the campaign closed, they closed up all their social media and they disappeared. So if that happens to you, that's a bad sign. The rule of thumb here generally is don't be in a hurry. Right? So if anybody wants you to give them money fast because the opportunity is going to close, that might seem counterintuitive, but it actually means that the project requires more of your scrutiny. Because if they're trying to get you to do something fast, chances are pretty good that they're trying to get you to make a mistake. And the other thing just is, again, real simple common sense stuff. If something seems too good to be true, it probably is. So projects are structuring in all sorts of different ways to make it seem like people are getting a good deal, but then in the background they're actually giving, like a deeper discount that they're not disclosing. The one that comes to mind on that is stocks, which is the one that Floyd Mayweather recently promoted. And after they had done their sale, which raised tens of millions of dollars, it came out that about 50% of the supply had been sold for about 50% discount. So where people thought that buying in on the first day they were getting, the best deal available, actually they were getting not the best deal available because there had been a very large amount that had been pre-sold at this heavy discount.
That's a pump and dump.
It really is just
that's a pump.
Well, not necessarily a pump and dump. It's not necessary. Again, the dump has to happen for the pump to be a thing, right? These projects, even getting in at that, the sad part is that the markets don't make any sense and they just go up a lot of times. And a lot of these plays are just momentum-driven. They're just people seeing, oh, there's an advisor that, I trust. And honestly, it's hard to evaluate these projects in really any other way. So, the thing to emphasize here for anybody who's looking to get involved is just, be very careful because as much opportunity as there are so many scams out there right now. So you just really have to do your diligence, make sure that the people on the teams are real. The thing that got me was a project called metagame.io. And they had, a very good-looking web page. They had a good-looking team that all seemed real and had real LinkedIn profiles. But then if I had actually bothered to go and contact those people on LinkedIn, then I would have found out that they weren't actually affiliated and that their profiles were just being used. So extreme skepticism is the order of the day.
Very, very good analysis there. In terms of how many scams you've seen, I don't think a lot of these initial coin offerings have gone to zero yet. So I think that's why a lot of people don't believe it's a bubble yet, is because, we're seeing these news stories. There was an article from TechCrunch on the last day of August. The first ICO unicorns are here, and one of the ICOs, OMG token sale, raised $25 million in July, and it went up 40-fold already, and it has over $1 billion valuation. So when people see this, they're like, oh my God, I can get rich. Well, that was accidentally me saying, oh my God, again with the token sale, that, oh my God, I can get rich quick. So, people are overlooking those normal due diligence factors, like you said, and they're saying, okay, if I put $500 or $1,000 into this, or $500 into 10 of these things, maybe 2 of them will hit and go up 20-fold or 40-fold, and even if a couple of them are frauds, they'll pay for themselves. So that type of mentality, it kind of reminds me, you said you weren't around for the technology bubble from 1996 to 2000, but, there was all these people coming out of the woodworks because of how easy it was able to raise money back then. I think around $8 trillion was raised in not too long of a time period. And so, if you had a website like pets.com or toys.com, you didn't even need a business model. Oh, we were going to put content on the website and get clicks, and that was going to lead to revenue and all these other things. So it kind of reminds me a lot of that, where how these things are being sold. I'm sure since you're more involved in the industry and you have Let's Talk Bitcoin podcast, I'm sure you're getting a ton of initial coin offering spam emails now. I'm getting Monday through Friday, I'm getting one weird one a day. One of them is from the same token, and they've already changed every day what the money is for. So
Right.
it's like you got to invest in the next week, and oh, this is for robotics. Oh no, this is for Internet of Things. Oh, this is for healthcare. Then I just got one over the weekend for Western African telecommunications ICO sale.
Yeah. No, it's crazy. We actually started seeing the beginning of this 2 years ago, and at that point, we stopped talking with projects that were raising money. And we actually largely stopped talking with projects after they'd raised money, too, because unfortunately, it just becomes kind of the focus. And so I lost the earlier part of your question, but yeah, no, as far as whether or not it's a bubble, I'm sure that we are in a mini bubble right now. I think that the number you gave for the, kind of .com mania, if you want to call it that, is probably instructive. We are nowhere near even $1 trillion into these companies, and I think that we will see that. I think that we will see numbers that are analogous to the .com kind of era of investing. If for no other reason, then the space has this interesting way of manufacturing money for itself because it's so liquid. So, these companies, anyways, it's a very interesting problem that we're facing in the market right now. The problem really is it's too easy to raise money if you're willing to say things that might not necessarily be true. And so it leads to this kind of problem where that ignorance that many people have about the market is just sort of overlooked because it's convenient about these things. And so, then once you raise the money, well, you deal with the regulatory hassles later. There are people who are doing it right, but I think that, the temptation and the presence of the money is very hard to resist for a lot of people out there.
Excellent point. We're over 5,300 initial coin offerings already. Do you expect to see tens of thousands more coming soon in the next 12 months or so?
Yes, and the relevant difference between what's come before versus what's coming after is that many of the projects that we'll launch will be legitimate companies. Right now, there's this thing with new technology. This is not specific to Bitcoin, but just new technology is adopted by the people who are the least well served by the existing solutions. So what that means is that the small fish take the big risks first, and then as the small fish are successful with it, that signals the big fish that they should also be doing that. And that's what we're seeing now, is that the numbers that have been pulled in via ICOs have made it so that traditional funding methods are non-starters. I mean, it's actually really interesting. We started raising an A round towards the beginning of this year, just kind of like talking about it, and found that increasingly as the year went on, the interest was entirely in tokens. So we pivoted to doing a very small A round, just about $250,000, and then doing a much larger token sale for our project because we actually have been building infrastructure and kind of doing all these things on the not money but everything but money side of tokens for the last 3.5 years. So I mean that's the kind of interesting thing, is that legitimate companies are starting now to look at this and say this is an alternative to selling equity. And if you think about it like that, it's good for everybody because it's very much more liquid for the people who buy it. We have people who own our equity, and they're happy holding the equity, but they don't really have a choice because we're not a public company. So it's very, very difficult for them to actually get any sort of liquidity out of that investment. Whereas the token, it's really quite liquid, so that's not the problem there.
Do you think the goal is going to be to tokenize everything? Are we going to see, a lot of things that people weren't expecting brought tokenized and brought to the blockchain going forward?
Yeah, I think we are, but there's a caveat to that. It's really expensive to blockchain things right now. It's really expensive to to turn things into tokens right now. And so all of the use cases that are kind of the most interesting use cases to me are ones that have actually been priced out of Bitcoin right now, just because if you're sending a transaction, well, that's going to be $7. So when we started talking about this, I think when I did the first interview with you, I was paying 10 cents, less than that, substantially less than that, maybe less than a penny in terms of transaction fees, regardless of the amount of money. And so that made it very possible to think, oh, wow, you could use this to, tip somebody 25 cents. Wow, that was super efficient. I couldn't do that with a credit card. But now, now you look at that same problem, it's like, okay, well, I could tip 25 cents with a credit card and I would pay $1.20 in fees about, or I could tip 25 cents with Bitcoin and I would pay $7 in fees. So it's actually gone the other way. And so again, that's why, as we talked about earlier, something like Bitcoin Cash kind of makes sense to have as another option so that you can do those lower cost transactions. So far, our Bitcoin Cash hasn't caught on yet for that, but it's very, very new.
Yeah, I got half a Bitcoin as a donation earlier this year in January, and I don't think I'm going to be getting another half a Bitcoin as donation anytime soon.
Well, that is the interesting thing about Bitcoin, is that as a very deflationary thing so far historically, it's been punishing if you make the wrong decisions with it, And so it's interesting because, I think that it's really incentivizing. Actually, I think that all of these, this whole bull market is really incentivizing people to make really big risks that are ultimately not going to pay off. They're paying off now, though, and it's training people to do dumb things. Like there was a guy who mortgaged his house in spring, right? And in a sane market, that guy gets punished because mortgaged his house and bought Bitcoin with it, to be clear. So in a sane market, that guy gets punished by the market, but because his timing was right, he winds up with 5 or 6 times the amount of the money that he put in inside of 6 months. So it's really hard to argue with yield like that. And again, it's not good to take those risks, but I repeatedly see people being paid off for that, and I think that there will eventually be a reckoning. One of the other things about all of these other ICOs that we see out there is that they're very long-term plays, in my opinion. ICOs tend to sell the beautiful dream, which basically describes what the eventual system will be. But there are some assumptions implicit in that aren't really talked about. And the biggest one, and this is one that always kind of gets me, is that you actually need cryptocurrency in order to use most of these products. You can't go in and just use a credit card because tokens and cryptocurrency transactions are irreversible. And so sort of anything that's built entirely using that as the infrastructure necessarily has that characteristic where if I want to use a smart contract on Ethereum, I have to actually have some Ether. And it's hard to buy Ether with dollars. And so for people who are interested in investing in it, well, that's one thing because you're used to, having a trading account, hooking up your bank account to things. These are processes that we're kind of used to. But for people who are just normal, that's not the case at all. They have no idea, and they also don't care. If there's a cool application on Ethereum, they might want to use it, but jumping through all the hoops to get from here to there is hard. And so that's the thing about this stuff is that eventually something like Ethereum, something like full Bitcoin everything makes a world of sense. But it's a long ways off from now, just because it's still so hard to get in the door.
Yeah, that was an interesting point about long-term vision for initial coin offerings. I mean, I kind of did a short video a little while ago, and I compared them to biotechnology stocks on steroids because biotechnology stocks, they're working with promising science. They have intellectual property. They have some good ideas. They're just not making money, so they suck up capital, and it could take years to pay off. It is a big speculation for a lot of small biotechnology stocks, especially if you don't have a medical or science background to figure out what's going to get FDA approval and eventually become a drug or get bought out by a larger company. So I think it's kind of like that, except, the price performance of these things, the speculators, because the charts are so good on these things, there's been a lot of money rolling in from Silicon Valley and Wall Street lately for them. So you brought up smart contracts, though. I want to ask you now about have you actually worked with smart contracts? Because I've interviewed, other Bitcoin experts like Trace Meyer, Andreas Antonopoulos, and really, they, for the most part, haven't really done any smart contracts because it doesn't seem like I always hear people bring up smart contracts, but no one seems to really trust them yet. And because they can, if there's a screw up and you put a lot of money into them, it could be a very expensive mistake.
Right. I mean, that's basically it, is that smart contracts are still very much at a testing phase of their kind of development life cycle. We saw people move too far too fast with them, and what it kind of led to was mistakes being made. And those mistakes, because the amounts of money involved were pretty bad. And frankly, I mean, Ethereum did a great job of recovering from it, They took the problem that was the DAO, which was, I believe, $60 or $80 million in the hole, and they did something completely unconventional and changed history by making it so that attack didn't happen. So again, some people disagree with their choice to do that because to change history on a blockchain has historically been, taboo. But at the same time, they addressed the problem and they solved it to a large degree. I'm sorry, I forgot the other part of your question.
I was just wondering then if you, in your experience then, if smart contracts routinely malfunction, do they only do a few things right now, a few variables, 1 or 2 variables per contract?
Right.
Because I've heard other experts call them basically dumb contracts now, even though they're, the potential for them is a lot, but really right now they do very little.
Right. I mean, so it's the automation systems that they enable, that all works right now. The problem is that, again, you have to actually have information or whatever you're doing be on the Ethereum blockchain in order for it to be automatable. So that's the problem, is that the blockchain is really only one very small component of all of these applications. And then there's all this software that needs to wrap around it. And with Ethereum, what I've noticed personally is that because it is possible to do everything using Ethereum, people like to do it, to do everything using Ethereum. And so an example of why this is a bad idea is a project called Status. Is basically a chat application that runs all of its chat through the Ethereum computer. And so the problem with that is that it means that it costs money to chat, since you have to actually pay to have these transactions processed not just by your computer, but by everybody's computer. So there are applications of smart contracts that you could see being useful in a chat, but making the actual smart contract application, making the actual chat application itself a smart contract is silly, because it means that if there's a sale going on that's occupying most of the network's capacity and paying high fees, then anybody who's chatting on your application is now being delayed by somebody else's sale that has nothing to do with them. So, like I said, there's what is possible versus what is practical. And right now, most people are focused on what is possible because it's cooler. You know, it's cool to talk about here's what all this stuff looks like at the end. But we're not there yet. We're kind of very early in that cycle. I like to think about smart contracts like piñatas. Right? Like the more successful they are, the bigger the prize that's inside, and the bigger the reward then for busting it open. So you can have smart contracts start off really secure, and then just because it goes from $1 million that's being stored there to $100 million that's being stored there, suddenly it's not secure any longer, because somebody can actually spend $1 million, figuring out how to break it open and make a $99 million profit. So that's the problem, is that smart contracts are going to be great, but I agree they're very, very early and really should just be used for testing applications at this point. And again, because we don't actually have this information on the blockchain, it's not like you even could use them for anything outside of coordinating investment and financial things like that I think frankly are better served with companies that have a legal system and that have reputation, because that's the whole thing about cryptocurrency, right? Is it's providing service that's automated to people who aren't served by the current system. So if you think about it, what's a smart contract? It's a smart contract. It's a contract that's intended to serve people who are not served well by the current legal system. So who's that? That's criminals. That's pretty much it right now. So it's just like the early days of Bitcoin, when the only thing people were using it for was drugs, except in this case it's all the other things.
Well, there's also a lot of middle-class people now that, if the cost to hire a quality lawyer was cheaper, they would be using a lawyer more. But, the cost of quality lawyers right now is pretty high. So, yes, there's, new websites like LegalZoom and others, but still, if you actually want to hire a human being lawyer, normally the fees are quite high. So, but, the track record, long-term, maybe smart contracts do have a lot of potential, but I think we're years away right now between the potential versus the reality of can you trust them, how many things they're able to do successfully, because I've heard the goal for a lot of financial markets is to have smart contracts for options trades or things like that eventually for financial markets, but I don't think we're anywhere close to being able to do that fully successfully on a blockchain, and it being able to handle hedge fund level trading volume.
Yeah, I see it as being two steps, really. I think the first optimization is just using a blockchain at all, because really, once you start using a blockchain, then all the smart contract problems get so much easier, right? Because the problem really with smart contracts, yes, there are security issues, but that's just because the technology is young and there haven't been that many projects yet. The projects that have come out and have had security issues have led to really great learning within the space, and I really want to commend everybody who has done that work, because they've gotten a lot better fast. But it's still just it's hard. It's a 2-year-old. I mean, you just can't have that great expectations from them to handle multiple millions of dollars or large investment amounts. It's very hard to kind of put that sort of weight on the shoulders, and it's apropos here as well.
Good analogy. Now, in the last couple days, we've had China announce an initial coin offering ban in China that's knocked the price down of Bitcoin and Ethereum, at least temporarily, down 20% really quickly. What's your opinion on the initial coin offering ban in China?
It's not surprising to me. China has done stuff like this a couple of times. They attempt to control their economy by by making announcements and by banning things kind of proactively. They're much more active than the U.S. is generally. Frankly, I think that what it means is that if you were, trying to participate or trying to launch an ICO in China, then probably that's not something that's going to happen anymore. But for everybody else, it sort of doesn't really matter. The big question is, what does this do to Chinese ICO buyers? Because in many sales, Chinese ICO buyers kind of represent an outsized proportion relative to other nationalities. So if this has an effect on that, then we might see numbers go down, or we might see, a decrease in the amount of funding that's available. That sort of thing has happened before. If you recall, a couple of years ago, China made an announcement. I guess, was it just this year that they closed down all of the exchanges for a few months? And that caused the same sort of panic. But again, things recovered pretty quickly. China is a communist country, so the sorts of things that are going on with ICOs are really unhealthy for that sort of an economy. It doesn't surprise me to see this sort of move, and I don't think that we'll see it echoed in many places that don't have that sort of mindset.
Yeah. China's government is communist, but their economy is a little bit more complicated than that because they have a bunch of state-owned enterprises, including their banking system and other large, basically monopoly corporations like in telecommunications and others. But if you're a small business owner in China, you really just have to pay some registration fees, and you get some free market capitalism. So it's kind of
right. I'm not suggesting that. I'm suggesting that if you look at from an incentives perspective, I mean, this makes sense. Like, again, it doesn't matter what the people are. It matters what the leadership are. It's the leadership that made this announcement and made this change.
Yeah, and that's probably because, they're worried that, like, the cryptocurrencies are competing with maybe other investments in China, like the Chinese stock market. Maybe they're worried people take money out of the Chinese property market, which is a bubble, and the Chinese stock market, which was a bubble. So maybe they're trying to prevent collapses in those other larger markets.
Right, that's my read too. Is they're just trying to balance things, right? They're just trying to keep things steady so that stuff doesn't get so out of whack that things start to break in their society. I think that really, if you look at their actions historically, that usually is like what they do usually makes sense through that prism.
Do you speculate on Ethereum or Litecoin or some of these altcoins? Do you think there's real technological innovations in things like Monero, or in general, do you not put a lot of your own capital into a lot of these other altcoins?
That's an interesting question. I definitely I think that there's a lot of value being created in many of the kind of tokens and different product offerings that are out there. I think a lot of it is nonsense, but the reality with these projects is that they often don't go below their ICO price because there's no reason why they should. So if a company raises $30 million and then they totally waste $10 million over the course of 3 years, they still have $20 million, So it's hard to bet against any of these companies, assuming that they have any sort of a rational actual plan and a rational actual team that can actually deliver on this stuff. So I do not participate in the stock market anymore. I do participate in these markets because I see more opportunity here than I have historically.
That's very interesting. Yeah, it seems pretty easy for a lot of companies right now to raise $1 million, $5 million, $10 million, even $20 million. Now, maybe I should do an initial coin offering for my educational technology company that I have a full business plan on for Wall Street for Main Street. But because, there's teaching like Austrian school economics and things in there in the curriculum, no one on Wall Street or Silicon Valley wants to fund it.
Well, I think that, I definitely I get the joke there, but I mean, that's kind of the reality, like I said, is that real companies are actually coming to this. So what I mean by that is both existing companies and real non-crypto businesses that might be kind of at a nascent state because they can't get funding, as we talked about. So, I mean, ICOs have gotten hot in the last, 9 months. Before that, we used to call them token sales. And, that was kind of the empowering thing about token sales at that point. People weren't raising insane amounts of money, but they were raising hundreds of thousands of dollars. They were raising millions of dollars without having to put any equity up. And as a result, they were able to do projects that, otherwise would have been very difficult to do. So again, it's that kind of like the early adopters are the people who are the least well served. So that means that on the one hand, maybe they shouldn't have gotten that funding, but maybe they should have gotten that funding, and it's just a problem with the existing system. So I think that for projects like yours, increasingly we're seeing interest in this sort of thing. And if you're not looking to raise millions of dollars, which incidentally is a small amount of money in this space, most of these projects are raising 10 million or more, and so 3 million is actually something that kind of gets you looked at funny, because the market would probably give you more for it in this current environment.
Adam, so you were saying that people look at you funny when you try to raise $3 million. Well, I think, I was kind of half joking when I said this last week or two, that I should try to raise $5 or $10 million for my educational technology company and do an ICO token.
Like I said, I think that there's an enormous opportunity for companies that have actual fan bases, actual business models, to take this mechanism, because really that's what it is. It's just a really good fundraising mechanism, and use it in order to fund things that otherwise are very difficult to fund in this environment. So, if you're starting a startup, it's great for that. If you, again, bad projects are going to use it, but that doesn't mean that it's a bad mechanism. The mechanism itself is the thing that's powerful, and token sales, I think, without a doubt, are going to be a major part of fundraising for unconventional projects, at least in the foreseeable future.
Why do you think Burger King in Russia decided to only sell 1 billion Whopper coins? Why not 10 billion or 100 billion?
I don't know. Like I said, Whopper coin is an interesting idea. A big part about cryptocurrency, like what lends it legitimacy and utility, is the number of people who have it on the one side, combined with the places that you can use it on the other side. So something like Burger King, even just geographically restricted to Russia, that still is a huge opportunity for them to get it out to a huge number of people, and then also to give it value simply by making it so that you can use it to buy food. And it creates this kind of interesting, almost micro ecosystem for Burger King. So I don't know. I'm really excited about that as an experiment, and I'll be it's going to be a challenge for them even to distribute it to that many people. That's kind of the underlying here, is that most of the projects we see are small because scaling is hard. Scaling is one of those problems, so going from 7 transactions per second up to 100 transactions per second or 1,000 transactions per second, that's a really hard problem without making serious compromises to what makes Bitcoin Bitcoin. So, and this is true of Ethereum too, it's not just a Bitcoin problem, this is basically a cryptocurrency problem. So it'll be interesting to see how they wind up distributing those tokens, how many people wind up using them, if they have a speculative value. It's another great experiment in the space I'm looking forward to.
Yeah, it kind of seems, I agree it is an experiment, but it kind of seems like what these fast food chains are doing, with their app. Like if you download the McDonald's app, you get a free 6-pack of chicken McNuggets or something like that, where they're just trying to get extra buzz from the tech-savvy crowd to going back to one of those restaurants again. Because I've heard Taco Bell is thinking of a initial coin offering token now too, and so is KFC trying to copy what Burger King Russia did.
Well, so an initial coin offering, to be clear, is a coin that is sold, right? So it's generally a financialized coin. It's a coin that's intended to be used as a currency, something like that. I would say that what they're doing is a token rewards program, and I think that we will see many of these, where the token isn't being sold, the token is being given away for free as a bonus. And I agree with you. This is all kind of flag planting, right? So they're getting out there and saying, oh, we're the tech brand, the tech-friendly fast food brand, right? And that's great. This is exactly what kind of we've been waiting to see for a long time in the world of tokens. Is they're fantastic brandable vehicles, but the brands that use them really matter. Like they have to be brands that can actually support this sort of new innovative concept on their own. And I don't know if Burger King Russia is it, but we're getting closer.
Very good. And Tokenly, your company is at the forefront of creating initial coin offerings for content creators. So can you tell our listeners what plans you have for Tokenly? What the company does and your
absolutely.
Plans? Yeah, sure.
Yeah, absolutely. So Tokenly is a company that I started to create the tools that I needed to take my podcast, Let's Talk Bitcoin, which I started in 2013, and create a rewards program that does actually very similar to what I think the Burger King thing does, where basically people earn LTB coin for contributing content. So we have many podcasters on our network, and they contributed content while we were running this program. And then we had a magic word program, so if there was magic words on this episode, then I'd say the magic word today is turtle, and people would go to letstalkbitcoin.com or our player app, and they would log in and they would type in the word turtle, and then they would get some points for that. And at the end of each week, based on how much you did compared to everybody else in the system, then you would get some share of the new LTB coin that were going out. And so we created that using, Bitcoin, but then we found out that if we wanted an e-commerce system it worked with that, well, that didn't exist. If we wanted an account system that let us, use tokens as passwords, that didn't exist. And there was just this kind of gigantic laundry list of things. So I spent 3 years basically with Tokenly building out all of those tools that we needed in order to make that possible. And in November of last year, we started work on a project called Token.fm. So Token.fm is like Patreon combined with iTunes. And so artists and musicians and podcasters and audiobook authors can use the platform, upload their content to it, invite their fans to it, and then their fans can basically either buy memberships or they can pay to stream individual pieces of content. And then one of the other things that they can do, and then where tokens come into this, is that individual content creators can create tokens on the Bitcoin blockchain and pretty soon on the Ethereum blockchain too that can be used basically as memberships. So for musicians, I can create a token that represents an album worth of my music. And then I can use that within this system, and I can listen to all of the content basically for free, and I can even buy an album before it comes out. And as new songs are added by the artist, then they automatically get added because I own the token that grants access to them. In addition to that, you can do things like season passes, and what this allows is for somebody to buy a season pass, pay you entirely up front, but then if halfway through the season they're like, actually, I'm done listening to this, nothing wrong with you, Jason, just saying it's possible and it can happen, then that person can take that thing and instead of it just being worthless to them, they can actually give it to somebody else. And then that person has the subscription. Or if somebody wants to buy it, they can sell it to somebody else. And then that person has that subscription. So that's pretty much what we're doing with Token FM. Right now it's just for audio content. It'll be for video content soon enough. And yeah, as far as we can tell, because we have this utility for our tokens, it makes it possible for a content creator to basically do their own legal ICO and raise money in this fashion, not millions of dollars, mind you. It's not really intended for that. But you can raise enough to actually power your career and kind of power your thing entirely using your fans and off of abusive platforms like YouTube.
Yeah, and we were discussing about YouTube, how YouTube is now targeting with their censorship algorithms even more than in mid-2016, months before the election. They've ramped it up again. It started in August. They put on their content creator blog that basically, like, due to advertiser pressure, they were going to potentially any content that they viewed as not advertiser friendly, which normally means either libertarian, conservative, or pro-Trump, that they were going to potentially either set all those videos to private, so they can't, all the videos then are demonetized, or then they can't share them. And so, all my videos now, Adam, in the last week or two, have all been set default to demonetized. And I have to manually protest every single video now, no matter what the title is. I'm flagged in their system. I'm automatically, all my videos, no matter what the topic, even this interview with you, which we didn't discuss really politics at all, is going to be probably, set for demonetized by default, and I'm going to have to protest it. So you've got potentially a lot of new customers, and you could just send out emails to those channels on YouTube that are either my size or larger, and you could have customers and for Token FM.
Well, it's really unfortunate, frankly, that all of that is happening, but it doesn't surprise me because just the environment that we're in, even though this isn't a political conversation that we're having at all, this is still a political conversation because the environment that we're in is entirely political. So I'm sure that there are people who are inferring my beliefs about politics right now listening to this. And that's okay. I give everybody, that's everybody's right to do. But yeah, when platforms like Google, just when big companies that provide kind of a monopoly service, right? Because if you're doing video, you're probably doing it on YouTube. It's really hard when they take ideological stances. In the long term, I think where all of this is going is that when you upload content to a platform like YouTube, it's not just going to go to YouTube, it's also going to go to a blockchain. And so even if somebody can censor you on YouTube, they won't be able to censor you on the blockchain. And that's kind of the thing about the blockchain that's beautiful. So actually, that's something else that TokenFM does that I didn't mention, is that we actually are putting all content, when people are ready to publish it permanently, we put it up to the Florincoin blockchain using a project called the Open Index Protocol. You can learn more about it. It's an open source protocol at alexandria.io. And it uses a distributed file storage backend called Interplanetary File System, or IPFS, which is the project that just raised, I think, $250 million using a new type of token instrument. So, it's a crazy environment out there, but the good news for content creators, like you and me, is that there actually are finally solutions. Like the first couple of years in Bitcoin, it was really just about tipping. That was the thing where we were like, oh, this is going to be great because it's really cheap to send money to each other. But now that really isn't the case, the things that are being built are really, really empowering and are really intended to solve the problems that you're running into there. So I don't know if it's TokenFM or if it's something else, but solutions are coming, and I'm confident that within a year or two, this will be a solved problem.
Very cool. Yeah, and last year, Bitcoin I don't think is political at all, but I remember someone in the mainstream media, there's a few people saying how Bitcoin was racist. So things are just kind of getting ridiculous at this point, and it's getting worse and worse. I mean, Bitcoin is math, and there's people from all over the world who, whether you're in Africa, China, Venezuela, who are buying Bitcoin now. Some people are using Bitcoin now for food to save their families in Venezuela or countries where the governments are oppressive or there's problems with the banking system.
Yeah, so we've been hiring for the last couple of months, and one of the guys we hired is a 19-year-old from Venezuela, and that was basically his experience. He was able to, after working with us for like 2 months, and we paid him in Bitcoin, actually get out and move to a different country, and so things have gotten a bit more stable for him. So yeah, I mean, for the people who can earn Bitcoin, it's great. I think that there's really very little like it in terms of being able to bail yourself out just using kind of your own skills and good luck. But it's hard, right? Because that's the problem in a place like Venezuela. It's not that Bitcoin can help them; it's that they can't afford Bitcoin because they don't have any good money to buy it with. So it's sort of by the time you get to a Venezuela stage problem, it's really hard to actually improve the situation. But if you have a situation where everybody has a little bit of Bitcoin, or if Bitcoin is not terribly hard to get, then if a situation becomes bad like that, then suddenly there can be all of these exits. So that's really what I think of Bitcoin or cryptocurrency as in those situations, is it's an exit valve, where really most of the time, if your money in your country is hyperinflating or something crazy is happening, you are stuck, and there is nothing you can do but try to buy cars.
Well, people can use Bitcoin right now to buy food and cross the border. So yeah, these are small examples of success. But yeah, Bitcoin is very popular in Japan and China as well, and they're very technologically savvy societies, even more technologically savvy than a lot of the United States is. So yeah, it's becoming democratized, Bitcoin is. And to wrap these things up, I really enjoy the Let's Talk Bitcoin. I've been following your work for years now, and Bitcoin is starting to get a lot more notice. Did you see the IBM television commercial, the new one that they're running, and how they're mentioning blockchain within the first 5 or 10 seconds of the commercial? So even IBM is putting a lot of investment capital into there. I was actually at a DC Blockchain Technology Summit in March of this year, and there was an IBM vice president there, and he was like giddy that he was getting paid to build blockchains for private companies for 17 hours a day.
Yeah, I mean, that's, it's a very exciting time, because for a long time the question was, will big business, will enterprise, will kind of the big movers who can take this concept and actually make it into a worldwide mainstream thing, are they going to buy in, or is it something that kind of has to try and force itself through other means? And it does look like every direction you look, people are buying into it, and people are making very large investments into the space. And again, it's not just technology companies. There are, like, we work with the Open Music Initiative out of Berklee School of Music, and they've been enormous advocates for the entire space and for the entire blockchainization, tokenization movement of music and of kind of creative content. Just because, again, for people who have actually felt these problems, right? So reeling it back 1 second, I used to talk about Bitcoin like it was kind of the future of a better way to do money. But over time, what I really realized is that Bitcoin is the expression of cryptocurrency, and cryptocurrency is just an ownership layer, right? So anything that is valuable to have transferable, easy as email ownership transfers, or the ability to see what somebody owns if they want to show you, that's incredibly powerful. And so Bitcoin takes that and it applies it to money, and it's really valuable in money, but it's just the beginning. So that's where we are now, is like we're finally to the place where the money part, people understand that, and that's getting mainstream. But everything else, that's still to come.
Yeah, and more people are starting to not pay with cash as much, and they're paying with more things on their smartphone. So that is good for people who want to pay with Bitcoin or cryptocurrency as well. Well, Adam, I've reached the end of our interview. I really enjoy speaking with you, and it'll be interesting to see going forward how these markets behave. I mean, right now there's a lot of people, the sentiment is still extremely bullish. I think, anytime there's a dip in price, from a lot of my listeners and other people I speak to who have invested or speculated in the space, a lot of the people are like, oh, it dropped 30% or whatever, I'm going to buy more. So that seems to be the main sentiment right now.
Yeah, we may have passed the point of no return. I'm not quite sure, but it's certainly, the last 6 months are feeling like that. So either we're in a gigantic bubble, and I don't discount that possibility at all, or things have actually changed, and we might actually see some real kind of mainstream adoption from some of these bigger players who can actually take the things and make it mainstream. So I'm very excited for the future. Always great to talk to you, Jason.
Great. Well, thank you for your time. Wall Street for Main Street needs your help. Since the middle of 2016, YouTube continues to increasingly censor and sabotage the growth and success of my channel with dramatically slower or no subscriber growth, a huge decrease in views per month compared to 2016, and well over $10,000 lost in Google AdSense revenues the last 18 months. I should have been way over 20,000 subscribers and way over 3 million views last year, but it feels like I am Sisyphus trying to roll a heavier boulder with more and more additional weight up a steeper and steeper hill. In the last few weeks, all of my videos have been set to demonetization by default, and I have to manually protest each video. This is in addition to even lower than usual Google AdSense revenues after the adpocalypse started over a year ago for me. This has also affected my ability to get paid advertisers to agree to deals not involving YouTube, as I lost $3,000 per month in paid advertising deals at the end of June 2017 because all my analytics are down a lot thanks to YouTube censorship algorithms that have intentionally kneecapped the growth of my channel. With YouTube/Google/Alphabet /Don't Be Evil strongly considering demonetizing or setting all libertarian, conservative, or pro-Trump content to private to prevent any sharing or monetization, it is imperative I have a contingency plan to figure out how to make a living off my content. Each 30 to 40 minute video takes a few hours of my time before it's released to the public. There's a strong possibility that in the near future, YouTube will force me to move all or almost all my content to a new video upload website that allows free speech or behind a paywall on my own website. Thanks if you have already made a one-time or recurring monthly donation, and thanks in advance for any future donations as I decide the future of my channel and what to do with my content going forward. We accept one-time donations on the Wall Street for Main Street website via PayPal, Bitcoin, or Gold Money. You can also become a monthly Patreon contributor for $1 or more a month if you want to help me out. And don't forget to like each video on YouTube and share it with your friends and family if you think they would like the content.